Today on ChoWorld, we bring you the key points from the interview with the US Treasury Secretary Bessent. Firstly, a claim was raised that the United States would reach the highest tariff rate in the world based on the chart figures revealed by the President at the Rose Garden, and questions were posed about the process leading to this decision. In response, the Treasury Secretary explained that the President had long deliberated on tariff policies and that his experience imposing tariffs on China during his first term laid the foundation for this decision. In the next question, it was pointed out that the method for calculating mutual tariffs takes into account various factors such as the other country's tariff rates, non-tariff barriers, currency manipulation, and unfair subsidies. In response, Secretary Bessent emphasized the reliability of the calculation method by citing the vast amount of data accumulated by USTR and over 4,000 successful litigation cases. Additionally, it was mentioned with specific figures that in the case of China, an additional 34% tariff will be imposed on top of the existing 20%, totaling 54%, and questions were raised about the possibility of some countries objecting due to discrepancies with the tariffs actually imposed. The response explained that the robustness of this data would withstand legal challenges. Regarding the question on the automotive industry, it was noted that a 25% tariff is applied on foreign cars from midnight, sparking concerns of a sudden market shift. In response, the government stated its intention to protect consumers and the industry by recommending the purchase of American cars over foreign ones. In allied countries such as Canada, Mexico, South Korea, and Japan, concerns were raised regarding the burden of tariffs. However, the response stated that the same standards should apply since these countries have also imposed tariffs on the United States in the past, and a message was conveyed recommending the purchase of American products. Regarding retaliatory measures, there were concerns that immediate responses could escalate into a trade war, and the answer emphasized that all concerned parties should calm down and monitor the situation. In terms of tariff revenue, it was projected that if a 10% tariff were applied worldwide, approximately $300 billion in annual revenue could be generated, and that this revenue would be transformed into worker benefits such as tips, Social Security, overtime, and exemptions on car interest expenses. Furthermore, it was analyzed that while high tariff revenues would occur initially over time as factories relocate to the United States, the tariff revenues would transform into corporate income and wage increases, thereby stimulating the domestic economy. Regarding the stock market opening, it was suggested that while short-term stock price fluctuations are difficult to predict, in the long run the market will stabilize based on the economy's underlying fundamentals. Furthermore, it is evaluated that reduced government spending and increased job creation in the private sector could offset short-term concerns over rising prices, and that the tariff policy is regarded as a strategic measure aimed at addressing trade imbalances, restructuring the domestic industrial landscape, and expanding worker benefits. Finally, it was revealed that the promised tax benefits during the campaign could be covered by the tariff revenues, and there was a display of confidence in overcoming internal crises and improving the economic structure. In summary, the interview regarding the tariff policy can be evaluated as a strategic initiative aimed at fostering the development and structural improvement of the U.S. economy and addressing trade imbalances, even if it entails enduring short-term shock. That concludes the analysis of the tariff policy. I hope today's content has been helpful for your understanding. It was ChoWorld, thank you, and please note that this is not a buy-sell recommendation.